We all want financial freedom, right? It's about having choices, peace of mind, and the ability to live life on your own terms. But here's the deal. You can't achieve true financial freedom by just working hard and saving money. You've got to make your money work for you. That's where investing comes in. Investing is like planting seeds for a bountiful harvest down the road. When you invest, you're essentially buying a piece of something that you believe will grow in value over time. This could be a company's stock, a bond that pays interest, or even a piece of real estate. Now you might be thinking, investing is risky, Dave. And you know what? You're right. But here's the thing. Not investing is even riskier. Think about it. Inflation eats away at your savings every single day. If your money isn't growing faster than inflation, you're actually losing purchasing power. So how do you get started? The first step is to get your financial house in order. Pay off those high-interest debts like credit cards that are holding you back. Once you're out of debt, start building up your emergency fund. That's 3 to 6 months of living expenses tucked away in a safe, liquid account. With that safety net in place, you'll be in a much better position to start investing wisely. Now let's dive into some of the different ways you can invest your hard-earned money. Remember, diversification is key. Don't put all your eggs in one basket. First up, we've got stocks. When you buy a stock, you're buying a small ownership stake in a company. If the company does well, its stock price tends to go up, and you make money. Of course, if the company doesn't do well, the stock price could go down, and you could lose money. That's why it's crucial to do your research and invest in companies you believe in for the long haul. Next, we've got bonds. Bonds are like IOUs issued by governments or corporations. When you buy a bond, you're essentially lending money to the issuer in exchange for regular interest payments and the return of your principal when the bond matures. Bonds are generally considered less risky than stocks, but they also typically offer lower returns. Finally, let's talk about mutual funds. A mutual fund pools money from many investors to invest in a diversified portfolio of stocks, bonds, or other assets. Mutual funds are a great option for investors who want instant diversification without having to pick and choose individual stocks or bonds. Listen, I know talking about taxes and regulations isn't the most exciting thing in the world, but it's important stuff. The last thing you want is to get hit with a big, unexpected tax bill. In India, the Securities and Exchange Board of India, or SEBI, is the main regulatory body overseeing the investment industry. SEBI's job is to protect investors and maintain fair, orderly, and efficient markets. They have all sorts of rules and regulations in place to prevent fraud and make sure everyone's playing by the same set of rules. Now let's talk about taxes. When you invest, you might have to pay taxes on your earnings, such as capital gains and dividends. But here's the good news. There are ways to minimize your tax liability. For example, you can invest in tax-advantaged accounts like 401(k)s and Roth IRAs. These accounts allow your money to grow tax-deferred, or even tax-free, which can make a big difference in your long-term returns. The future of personal finance is all about technology and empowerment. Today you have more tools and resources at your fingertips than ever before to take control of your money and build a solid financial future. First and foremost, invest in yourself. The more you learn about personal finance, the better equipped you'll be to make smart decisions with your money. Read books, listen to podcasts, and take some online courses. Knowledge is power, especially when it comes to your money. Next, embrace technology. There are tons of fantastic apps and websites out there designed to help you budget, track your investments, and even automate your savings. Take advantage of these tools to simplify your financial life and stay on top of your goals. Finally, don't be afraid to ask for help. If you're feeling overwhelmed or unsure about something, don't hesitate to reach out to a financial advisor. A good advisor can help you create a personalized financial plan, choose the right investments, and stay on track to reach your goals. Remember, building wealth takes time, discipline, and a little bit of sweat equity. But trust me, the rewards are well worth it. So start investing today and watch your financial dreams take flight. Thanks for watching Quantum Wealth Nexus, where innovation meets inspiration. This video is created for educational and informational purposes only. It is not intended as financial, investment, or stock advice. Always do your own research or consult a professional before making financial decisions.